Righty-ho, folks, we've got Tori Trades in the house. We're about to dive in and find out the strategy that her uncle traded for the past 30 years, made a living from. Basically, this is a proven trading strategy you guys are going to learn today. Now, we did do a podcast before this, so if you do want to check that out, there's a link under the video here. But yeah, Tori, welcome back to the show.
Thanks for having me.
Okay, great. Well, let's share your screen and see how this thing works.
Let's do it. All right.
Our sponsor, Blue Guardian's the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
So I want to show you guys essentially where I get into trades, where I get out of trades, where I am, incorporating these areas of support and resistance, or supply and demand, or levels is kind of what I like to call them, because I like to kind of disassociate some of these terms as much as I can to help with psychology. So just to know that, okay, this 87.7, it is just a level. It is just an area where price has gotten to multiple times and turned around. And same with the trend lines, I like to change the terminology on those as well. So when I get into a trade, and we'll just walk through it here. So I'm going to go to a 4-hour time frame, and we are in consolidation right now. So this won't be as fun to show you guys. It's been driving me crazy actually. But let's go into an example here where price was trending. So I'm going to draw a trend line here. Let me make sure it's a ray. Okay, there we go. Yeah. Okay, so we've got 2 touch points here. We got a low, the lowest it's gone, in this time frame that we're looking at here on the screen. And then the second point where it has turned around, made a higher low. So this is my 2 touch points for this trend line here. Now, as price progressed and got steeper and steeper and steeper and gapped up, if I were to enter a trade based on the break, it would be incredibly far away from the opposing trend line. So I want to find something just a little bit closer. So I would come in, and let me know if you're following or if it's,
that makes sense.
Yeah. So I want to come in with something a little bit steeper. So what I would do is find, and it'll start to almost look like this fan of upward trend lines. If price is continuing steeper and steeper and steeper, I kind of want to track that steeper and steeper and steeper, because that mitigates my risk. So if, it does finally cross one of those, my risk is mitigated and it's a lot closer to my safety line. So let's draw another trend line here, trying to track this a little bit steeper up. So at one point it was here, at one point it was here, but this looks like the true break since we're seeing this past data. We can truly see when price broke this upward trend line. This was the point right here where it truly did change direction. Now, you and I know that because we're looking at it here. We can see this data. So it would have taken some trial and error in the past, but by 2 moves, 2 touch points, we would have been able to find out that this is the one. So being able to come in and track this steeper would have allowed me to mitigate my risk. So if I went into a short position here, which we can just draw a little something just to show that we are taking a short position, we'll just put a little down arrow here. So there we go. So price breaks this upward trend line, we're thinking short. If this trade were to have not worked out, I would have found out pretty quickly and pretty immediately. And the amount of risk here would have been very low, because as long as it stayed below this downward trend line that I've got from going pretty far back here, this is a pretty high. Let's go into the daily and see where that starts. Okay, so we've got based on these 2 trend lines here, or these 2 touch points here, and then we came in a little bit steeper here. So if we come back in, I know it looks like a laser show. I get that all the time, but I promise you when I'm in my 4-hour time frame, it's a lot cleaner. Okay, oh, we're in a daily. Let's go back to 4-hour. Also, we're thinking long positions here. So that's just what I'm thinking current time. But this is a higher risk trade because look how far away it is from our upward trend line. So the amount of position size that we're in here is going to be a little bit lower. But going back to out of some of this consolidation. And what's cool is when I draw these fan of upward trend lines, so let's say hypothetically speaking that this just went up steeper and steeper and steeper. What's cool is I have multiple opportunities to get in. So let's say that I did miss this one here. Let's say I missed it. I didn't get to get in, at any one of these candles, and maybe by this point it had already gone that far, and that's just, there's a possibility you missed the move. I would have had multiple opportunities to get in. So each time one of these upward trend lines is crossed, I can get in. So this right here also would have been an opportunity. A little bit higher risk trade, and you would have had to have drawdown in this one, whereas this one you wouldn't have had any drawdown, but this one would have worked out with some drawdown. But it's cool because you've just got multiple opportunities. So we probably would have found even another one yet here or here. This one had 3 touch points, 1, 2, 3. So I'm always looking for just, you know, as many opportunities as I can. It'll be, the amount of touch points are going to be different each time. So it's just based on essentially trying to find the new trend. So which one is this going to follow? Is it going to follow this downward trend? Is it going to follow this upward trend? It broke the upward trend line, so I'm thinking short positions. Now, a great setup would have been if, let's say that my area of, you know, resistance was somewhere closer to here, which this looks a little bit more accurate. Within this view here, we've got touch point, touch point, touch point, touch point. This would have been a beautiful setup. So not only did it cross the upward, cross that area of, you know, resistance or support. In this case, it was support at here, and then it crossed it. So the fact that it got double confirmation, I would have just felt awesome about this trade. But there are absolutely times where you think it's the perfect setup, and it's, you know, you've got double confirmation here. Things just look perfect, and then it just goes against you. So the risk is going to be where the price is in conjunction to the safety line. So as this continued down, now I'm trying to find, okay, what is the new trend? So let me try to find that. So let's try to find that new trend. We've got array here. Let's try to track this steeper. I like to color code my line just so it doesn't get a little crazy. But okay, this looks like it followed along this trend for a significant amount of time. So as I could see the price getting, you know, steeper, and I could find maybe more touch points, I could track this a little bit steeper. So now, whereas my risk was up here using this trend line, which was still low for my entry, now I can track that stop loss to trail along this one, which is even steeper. So now my stop loss will be in profit. So as long as it stays on the other side of this downward trend line, I'm safe. And essentially, this is me doing it over and over and over again. So looking for the next trend. Which one is it going to follow? I've always got downward lines and upward lines, and I'm looking to see which one is going to get crossed, which one does it follow along, where when one of these gets crossed, where's my safety line in conjunction to the price? Is it pretty far away? Am I able to, you know, mitigate that risk, cut it in half a little bit by coming in with a steeper trend line? So it's the strategy essentially is just incredibly dynamic. It's all purely just based on you trying to find the next trend and, you know, identifying if this is a higher risk trade or a lower risk trade. And if you can come in with maybe a steeper trend line to mitigate some of the risk, then absolutely amazing. But does that kind of make sense to you?
Yeah, I think it does make sense. Because a lot of stuff was going through my mind here, and I'm like, oh, no, now I get it. Now I seem to get it. I think we're because like the times where that red trend line you've just drawn gets touched again, you're not entering on those ones for the reason that the what is it, because you're already in a trade, or is it because it's because you're already in a trade?
Yes.
Right.
Now, one thing that I do like to tell myself is while I'm in a trade, I do like to keep lines on the screen that remind me why I got in. Because if I start to, yes, the price crossed this upward trend line. So technically you don't need it anymore. It's no longer traveling along this line. It's no longer valid. You can get rid of it. But I do keep it on the screen to, one, remind me why I got in. I got to know why I got it. I got into this trade, because this upward line was crossed. Or even this one here. This is a good example. Not necessarily, because we've got a beautiful amount of touch points here. 1, 2, 3, 4, 5, 6, 7. This was a beautiful trend line, actually. I was trying to see an example of where this doesn't work out. It could be, we'll just say, hypothetically speaking, maybe we've got a steeper downward trend line. And let's say that we tried to track this a little bit steeper. We said, okay, this is a little exaggerated, but let's say that we got in here, and we'll come in a little bit closer just to show you what this looks like when it doesn't work out. So we get into a short position here, and we're going to say that this downward line right here, we'll make it yellow, or no, we'll make this, let's make it pink. So this pink line is the one keeping us safe. So we would have gotten in, we are looking at a 4-hour time frame. So yes, it could have been, the next day until we found out, oh, okay, this trade isn't working out. We got to get out. And then, we go into a little bit of consolidation here to where it can't quite pick a direction and it comes up, pulls back down. But this would be, in so many scenarios, essentially where a trade doesn't work out. You get in, it doesn't work out, but look how, minimal this risk is here. You got in on the break, you're in profit, and then snapped against you. Minimal amount of drawdown here because, you got in right upon break. So it's just, this is an example of, okay, this looks like it could have been a fake out. Maybe this could have, snapped up against and then kept going down. And as long as you, use this as your safety line, yeah, you got faked out and you had to get out. Those happen to me a lot. But as long as the, risk is mitigated and this little fake out didn't, put a huge dent in my account size, then we're able to just go ahead and hop right into the next trade. Now we're looking for, okay, this was coming down, did a little fake out and is continuing, but where can I enter again now? So it would just be, okay, now where is the next trend? Is there somewhere that it looks like it could be an upward trend that's getting crossed? So it's essentially me just trying to find these trends. Me just trying to be like, okay, which one is it? Is it going to be upward? Is it going to be downward? Or are we going to be in consolidation for an entire month of June, which is where we're at right now? But it's never this crazy. I like to keep it, current. So these are all just past data. So I wouldn't have this here or this here, or all of these got crossed, which would have been beautiful entries to go short. That one was incredible. But just what's cool is, trying to track price steeper as it's going in a certain trend just gives you multiple opportunities. So this would have been a short opportunity. This would have been a short opportunity. And this one would have been, this is what I'm talking about. That double confirmation right here, cross the trend line and the area of support. Oh, that was just a beautiful move. And I'm sure I caught some of this. To be honest, let's see what the date was on here. My Zoom is in the way. Let me move it and see.
And I suppose with that one, you probably, it's one of those ones where you go, oh, well, if the trend line is now so far away from it, I don't want to give back after seeing that humongous wick at the bottom. You don't want to give back all that profit and wait for it to come back to the stop out trend line that you're trading.
Exactly. Yes. Yeah. So this is where my support and resistance will come in handy. So the fact that this move already here was incredibly extended, I don't believe I would have held the entirety of this trade to wait, for my safety line to get crossed. So then this is where my areas of, support and resistance or just these levels come into play. So absolutely closing at around this 67.19, totally happy with that. Totally happy because this was such an extended move. To be honest, I think this kind of middle level I had drawn, this was based on current data. So I don't know if I would have necessarily closed back in the past at this point, but if it had done something similar to this, closing even at that 70.11, I'd still be happy with because that's just still such an extended move there. But yes, you're absolutely right. When it makes such an extended move and like a wick like that, you're absolutely happy with whatever profit you get. You don't have to let this entire trade, play out because that was such an extended move. So yeah, that absolutely happens. But the cool thing is just with trend lines, there's always opportunities. That's why I rarely get FOMO because I usually have like this fan of trend lines where I'm like, okay, I got multiple entries. If I miss one, there's another one right here. Or if I miss one, there's another one right here. So understanding that there's always going to be moves. There's, especially here with oil, let me zoom out one more time. And
do you ever get sort of like, I suppose, tricked out by there being too many trend lines or like not, and how do you sort of combat that?
So it's usually about this view here. So even with consolidation, we've got a maximum of 3 downward trend lines and, only 1 upward trend line to work with. So it's never truly as crazy as what we had just gone through. If I do catch myself getting a little bit overwhelmed with trend lines, I know that I'm probably not doing something right. So there should never be that many. Now, if price is truly, I'm trying to find an area where maybe price is truly just tracking down steep. Like let's do a little bar replay so we can get rid of some of the past data. Let's just say we're here, for example. There we go. Okay, so let's track this down. It's headed down incredibly steep, almost a vertical move here. So we would have something that looks a little bit like this. We'd have point A here, point B here, and then at this point we don't necessarily have anything. We don't have where price is pulled back and then made a lower high. So I would have to leave it at this until price truly does pull back and then give me another point. So this would be an example of where I can't draw a trend line here. It's just this move is so extended and so vertical. I would basically be drawing a vertical line here if I was to draw one. So at least waiting for price to give you that point B or that, that pullback and then continue in the same direction is something that I have found, people that trade a very similar strategy, they want to just, try to find where the trend is, and to not let price give you that point is something you got to wait on. You just have to be patient. So this would be a point where I got to sit on my hands and wait for the price to truly give me another point B for this if I was to draw a steeper line, or I've just got to wait for the price to get closer to this trend line here. So there's plenty of times where I also have to just be patient, because price will do something like this. And if I hadn't, already placed one of these trades or been in this move, I've just got to wait. I got to wait for price to either pull back, give me a better area to put a downward trend line, or wait for price to get closer to that trend line.
Brilliant. Well, that's a great breakdown of your strategy there, Tori. And for somebody who was looking to try and, master this, how long would you say, spend marking it up, doing your back testing to get to a point where, you get consistent results or have a better view on drawing trend lines and making them work for you?
The strategy itself, as you've seen, it's elementary. It's very visual. You look for point A's and point B's, multiple touch points if you can. I would say it doesn't take much. It's got to be all psychological. You got to understand that whatever strategy you're using, if your entries are based on, the candle closing outside of the break or retesting the break, or if you're entering upon break, just understanding your strategy enough to be like, okay, this is a clear entry, or this is not a clear entry. But drawing the trend lines and the support and resistance, that doesn't take long. You could probably master that in a month. But the fact that it took me 3 years to just get down the mental side of it, that's the part that's maybe going to be a little bit different for each person.
Yeah, exactly. Well, look, folks, do go and check out that podcast we did where Tori talks about all that sort of stuff. Now, what's the best way for folks to find out more about you?
My Instagram channel at Tori.trades, or my YouTube channel, Tori Trades, or my Twitter, Tori Trades.
All right, folks, what we'll do is we'll put a link to Tori's show notes page underneath the video here. So all those links will be in that. Whilst you're hitting stuff around there, make sure you click on that subscribe, like, and that notification bell, and we'll see you in the next video. Right, folks, I'm here at the Black Bull Markets headquarters up in Auckland, New Zealand, and I'm standing in front of their whiskey bar. Now, if you like that kind of selection, you're going to love their 26,000 tradable assets from Forex, cryptos, indices, stocks, you name it, they've got it. So, folks, go and check them out at blackbullmarkets.com, or click the link under the video or in the card above.